This is the Orderflows market review for Friday, May 20th, 2016. My name is Michael Valtos. I'm the founder of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so, today was Friday, and it has been kind of a long week in the sense that, you had the hawkish Fed minutes that came out on Wednesday, which are pricing in a greater risk of a June rate hike. Honestly, I don't think there will be one, but if there is going to be one this year, it will be in June. And, so the market has been pretty much all over the place the last couple of days. And today was Friday. I was really looking for, hopefully, a little bit calmer, easier to trade day. I forgot which day it was. Tuesday. Tuesday was not a good trading day. Wednesday ended up as being towards a break-even-ish day. Thursday, I did start out on the back foot early in the S&Ps. Bonds gave me a few opportunities later in the day to turn the day around. But today was Friday. And there was three trades I took in the S&Ps. I'm going to talk about them here. Two of them were on the 5 range chart. One was on the 10 range chart. One loser, two winners. This is the first one. This was just before 9 o'clock in the S&Ps. We've been going up quite nicely. And we sort of hit this area up in here at 52.5. You have a divergence. It was a small one. Within the next bar, things really started looking like, hey, maybe there's some volume up here. We're going to stop and and possibly turn around and go lower. And you got a ratio that you like. You got a strong negative delta. I ended up getting short here at 50. I was looking for a move down into the 48 area. My stop is just going to be right up around here, this 52 area, sort of this, I'll say this previous high, but really if we're going to trade back up above, this bar, this 1300, then, I don't necessarily want to be short. So, I got short at 50 and immediately it trades right back up to the level I don't want it to be in. And we're just sort of hanging around this area here, 50, come down even here to 49. Again, it really wasn't working out. Honestly, I should have gotten out a little bit sooner than when I did. I ended up getting out at 51.5, which was this, this area up here, right on the other side. To get through it once, okay. Sometimes you do retrace back and then sell off. So, I'm not hitting the panic button just yet. Then when we start coming back up here, I take my chance to get out here. So it was a loss. It was a loss of 1.5 points, and it wasn't a great start to the day. Then we just go sideways a little bit. We poke a little bit higher, and we hit this high here. This is at 2054, about 9:15, and there's a couple things that are interesting here. You got a strong negative delta, 1400. So I have a divergence. It's a new high. I have a ratio that I like. It's telling me there's some volume up here at the top of this bar, potentially stopping this move. This bar here at 9:14, it's a doji candle, but your point of control is right at the top. And this bar is down, this red candle, you can point of control right at the second level. I like seeing the points of controls in red bars, at ends of moves towards the top. So, I got short in the next bar at 53 here. I was thinking, if I could have gotten short at 50, this point of control, 53 3/4, I thought that, probably would have given me a little bit something. But oftentimes, you see this heavy volume up here at the top, and the market just makes its move. I did get in on a little bit of a pullback at 53. If you want to look back on the trade and say, well, yeah, a better entry would be 53.5. Yes, it would, but at the same time, might not have gotten into it. It did sort of pop up here really quick. Tested this point of control, and then started to come off. I had my take profit down here at 51. This is just a quick 2-point trade. As we were coming down here, there was some decent volume here at 52 1/4. And then even when we were trading 51 1/4, there's a big order in there. It was iceberged, and is trading 500, 1,000, 1,500, 2,000, and then here I am sitting at 51, thinking, are we going to get through there? Oftentimes, when you see an order like that, if we get through that, you are going to get a little bit of a pop. I had thought of moving my bid off, coming down maybe to 50, or 50.5. But oftentimes when you have this bid here at 2.5, then you got another bid here at 1 1/4, so it's about a point away. And so this is 1 1/4. Then I'm thinking, if we're going to be another point away, it's going to probably be another bid in here, around the 50.5, 51 1/4 level. And it actually is here at 50 and 3/4, 50.5, 50 1/4. There was still some support. So you can see the volume that was trading there. We did get through that, but at the same time, do you want to fight that? So the first trade I lost 1.5. This one I made back 2 points. So I'm doing okay for the day. Then this next trade, actually I should really I could talk about it really quick here on the 5 range, but the reason I took it is on the 10 range. You have this high, you have a strong negative delta, 1700, and you have the next bar, you have your ratio. Okay, so I got short here at 53. I didn't get short off of this. I'll talk about what I did get short off of in a minute. But this is similar in the sense to that trade that I took earlier that failed. So I'm short here at 3 1/4. If I was trading this off off this 5 range, I'd be taking a quick take profit somewhere around 51.5, 51 1/4. It did trade back up to this level. Then you get a couple of ratios. You got the delta scalper coming in before it fell over. But I want to show you the chart that I took it off and discuss that. Okay, so this is the E-minis, the 10 range chart, and this is the trade here, getting short at 53 1/4. Okay, so we had sort of been hanging around the high. We sort of popped up, made this new high, and the reason I took this trade here off this 10 range chart was you're still hanging around the high. You have some positive deltas, but this one's small, 62. Here you got 1296, and then boom, you hit your high, and you have this big negative delta, 5,604. Very strong. Your point of control is right up here at the top. The delta scalper is kicking off, and what the delta scalper is doing is generally it will tell you when there's big shifts in supply and demand. So the market had been in a demand market pretty much most of the morning. Then you come up to this high and the delta scalper is kicking off. It's telling you that there's a shift. We're potentially changing from a demand-driven market to a supply-driven market. So I'm short here. I got short here at 53 1/4 towards the end of this bar, and boom, we just we sort of this next bar actually here, even though it's down, it took a long time to build. It took over an hour. We spent a lot of time in there. The bar's got heavy volume, 100,000. And it's one of those things I don't really like to sit through trade that long. I ended up getting out, around 12:30. But to have this one bar sort of forming, it's going nowhere. So it's telling me there's some price acceptance here. People are happy to trade right now around these levels. So I'm curious to see if we're going to trade back up or sort of stay below this point of control here. Because if the market, if you're thinking this is your high and the market's going to start going lower, you want to see the market stay below this point of control, just as you want to see the market stay below this point of control. After this bar, this next bar, we came back up towards it, but then we immediately turned around, and this was just a couple minutes. Once we got out of this bar, the move happened pretty quick, and this. You got this heavy volume here. You're seeing 20,000 here, 20,000 here, 11, 10,000, 11, 11. So, we're below it. If we're going to come back up to it, I don't want to be hanging around this level. I just want to see the move happen. And I want to see this acting as resistance. Which it did. You see, it came back up to it. Yeah, it got on the other side, but still, the selling just came right back in. You see selling imbalance, selling imbalance, selling imbalance, selling imbalance. And we just, again, the next bar moved pretty quick. It was about 6 minutes before we got down to 48 and a quarter. But what I saw here, especially with this delta scalper kicking off right here at the high, it's telling me, hey, there's a potential shift, a change from a demand-driven market as we're going up to a supply-driven market. Now, there's a lot of supply on hand. People want to get out, get rid of their supply. Get rid of their, say inventory, but what they have on their books. They want to get out of it now, and the market did react to it. It was a nice 5-point move. It actually went a little bit lower, later, but you're talking, you really want to be holding it till 1 o'clock, to 2 o'clock, even going into the 3 o'clock. We ended up the day at 20.50. So, it wasn't a bad day. There was some moves early. He tried to sort of catch this falling knife. It didn't happen. I was able to catch it up here, and even up here. It's always hard, on a day, especially on a day like earlier this week. The market was trending, and if you're trying to get short around the high, you're going to get chopped up. That happened to me a few times. At least today gave me 3 opportunities, 2 of which were decent, profitable trades. And the small, there was a loss, but it was relatively contained. But it was nice to end the day on a nice 5-point winner. But before I end this, I'll talk about the bond market real quick. It had been in a very tight range most of the morning. 8:30. We're trading basically between 29 and 22, and this is at the time when S&Ps are making new highs. And we're powering to our highs in the S&Ps, and bonds were just sort of hanging around. They weren't selling off or doing anything. They're just sort of hanging around this area here, which I thought was interesting. The market wasn't doing what you would expect it to do. It wasn't falling over the way it was, basically earlier in the week. And then we started rallying, actually, as S&Ps were making new highs. And I saw this. I didn't trade it, but I do want to talk about it because it's kind of similar to the trade that I had taken in the S&Ps. You'd come up here. You don't have a divergence, but you got this heavy volume right up in here. You got a ratio bounds low. You got 1100. So there's a decent stopping volume up there. I mean, it's the first area. As the market is moving, and then it just sort of stops in an area. You get a ratio bounds low. Look at it. See. Check out the volume. See if it's legitimate or not. And then what happens? We come back up towards it 2 bars later. You trade 13 lots right at this point of control, and then it just sort of gradually, starts trending down. Honestly, I really wasn't interested in the bonds today just because they weren't really reacting the way you were expecting to, and honestly, for the first couple hours, we've been in a very tight range. I had saw this. This is around the time when I'm in my S&P trade, so I was kind of interested, but I was already sort of I'll say stuck. I was in a trade that was getting ready to reach my profit target in the S&Ps. But this one, it was setting up nicely. This is what I call that O2X trade, where you have your high or low, but in this case it's the high. You sell off a little bit and you rally back up towards that high. You get within 2 ticks of that high. You're looking to get, have an offer in here within 2 ticks of this high. Your stop is going to be about 3 ticks here, so just behind the high, and you're going to be looking for it to retrace back up into here within 2 ticks of that high before selling off. So if you could have gotten in, you could have gotten in at 14, at 15. And it gave you a move down to below 08. So, at the very least you could have got 5 points out of it. But as I said, I didn't take that trade, but I just saw that it was happening around the time I was in the bond trade, or sorry, in the S&P trade, and it just was a bit more concentrating on the S&P trade, and was just ready to take my profit and turn off my machine. Okay, so thanks for watching this video. This was, those were the 3 trades that I took, and I talk about the bonds, which is a trade I didn't take, but the setup was there. If you want to learn more about trading with order flow and the software used in this video, be sure to visit my site, www.orderflows.com. We have a daily trade room, we have a 15-hour video course, and obviously we developed our own software in order to help you read the order flow. The problem with a lot of software out there, it just doesn't teach you, they don't teach you how to read the order flow. So, again, if you got any questions, you send me an email. My email is up here, mike@orderflows.com, or just visit my website, www.orderflows.com. I'll do my best to get back to you. It might take me a day or so. I'm just one person. It's just me and our programmer. But, I'll do my best to get back to you. So thanks for watching, and I'll pick things up next week.